What is up, everybody? This is Ken Marsh the Fourth with yet another video. In this video, I'm going to be going over the AUDUSD trade that I was talking about a few videos ago. I didn't show anything on that video. I showed the AUD-NZD, so this video will go into detail about that one. So please check out the risk disclaimer. If you need to, pause it, give it a read, and we will see you in a bit. Okay, everybody, welcome back to another video. This video, I want to kind of touch back on AUD-USD. I had mentioned it in a past video, a couple videos back. I was talking about the AUD-NZD pair, and I had talked about my fund manager was in the AUD-USD pair. So I want to show you kind of how that trade played out. And first I want to show you what I'm looking for on the daily time frame to start catching my eye to what I need to do on the hourly time frame to enter into the trade. So right down here, as you can see, we are very bearish on AUD-USD at the moment. And here we ended up going into a range. After we broke below this range, we had a nice move down. Then we've pulled back up to resistance here, which makes this a very powerful resistance area. As you can see, I like to consider areas that you have bounces on the top and the bottom to consider it a very strong support resistance area. We get a nice touch up here and we move down. And again, like I talked about in my last video on how to trade on the daily time frame, and this is almost the exact same thing. What we're looking for is market manipulation. We come down here, we do not blow out the low here, and we start to move up. So I'm anticipating a fake out above this high, which we did get that. We get a move above this high, and it's of course also the support resistance area, and we fall back down. And then at this point, we are looking for an entry on the lower time frame. So let's go down to the 1 hour time frame. Boom. Okay. Now, as you see, we had a nice move down here. Right here is that high where we break the support resistance area, and then we move down, and then we come up here. Now, this is not an entry. It looks like it could be if you used Fibonacci, but I'm looking for the move to come down a lot more than that. This is considered, though, for me, a swing low, and once we break through here and we get a really nice move down, I'm anticipating a bounce off of this structure over here, and then we're going to look for a move up, and that's when they're going to look for enough liquidity or a good price to enter in the market. This right here is an order block. As you can see, it comes right up into the order block, just touches it, and orders trigger to sell. So let me show you by drawing my fib here. All right, there's a fib. Now, again, you guys know I like to trade in this area here. Now, between the 62 and the 79, it's not a magic area. You know, bank algorithms aren't using this Fibonacci to come up with trade orders. It's basically a way for me to teach you guys how to look for an area that's most likely going to be where the market is going to be coming up to find orders. Of course, it's going to be, this is right smack in the middle of the start of the order block. So, of course, you're going to get a move up into this area. Like I said, sometimes, like I've said in other videos, I like to enter a little in between the 62 and the 70.5. The reason for that is sometimes the market won't completely reach into an order block or into a liquidity area. It'll just be slightly lower than that. Just the way it is. It's because each person that's trading in the spot market has different brokers, and each broker doesn't exactly have the same data. You can go to Awanda and look at the data. You can look at, I don't even know what all the other brokers are. Just look at different brokers. You're going to see different data. It's going to look very similar, except for the wicks are going to be slightly different. So I like to enter a little bit lower in, somewhere in between the 62 and the 70.5. And what I want to touch on too is the fact that I don't always get an entry. Sometimes if I am asleep or if I'm busy, I have a sell limit here. Sometimes it doesn't trigger. It happened to me quite a bit this week. It's NFP week. It's a little bit different than normal weeks. Lots of news, lots of manipulation. So just sometimes I get the fill, sometimes I don't. But most of the time, even if I don't get the fill, usually I'm correct and the price is going to continue. It just helps me realize that my analysis is pretty much spot on. So if I don't get the trade, it sucks, but at the same time, at least I know I'm correct. But in this instance, we do get a fill in the order. On the order, your stop loss will be up here at the 100% level, plus your spread, just to give you a little extra room. So you're going to have a small risk area, and then when you come down here, if you were trade my trading strategy, you would be taking first profit off right around the 0% area of the fib. And then again, I have different ways to exit. In this case, I would be exiting on the 200%. So let me draw that fib out for you and show you where the 2% area would be. All right, let me move that over just a little bit more. Perfect. All right, as you can see, market moves down, it goes into consolidation, and then you get another move down into another consolidation area, and then you come straight down into the 200% level, and you are hitting your second take profit level very easily. And of course, you see it's continuing lower. If you are trading on a higher time frame, you might be able to enter here. This is another way. I didn't touch on my last video. I will be going over those in the future, but this is another way to extend an entry. If you get a really good entry, like this one, that's just below the high on a daily candle, and it's a really important swing high, you can actually extend this trade into the daily time frame, and you can just move your stops as you go. Once it hits this area, if you want to take another profit off here and just leave some more to run, you can do that. There's all kinds of different ways. As I tell you guys, everybody has a different way of trading. The main key thing, as I always say, is risk management and trade management. You just try to get out of risk and get into profitability, which is why I like to take first profit off so that I show profit, move my stop loss as I go, so that I can lock in profit so that I can get to my 3% per week or more. So as you can see, the market has moved quite a bit down, but it's okay. I got the most. I would if I was in this trade, I would have got the most I could out of this market. My fund manager is actually, I believe, still in this trade, or he might have exited here. I'm not quite 100% sure yet if he has, but it's okay. The main point today is to show you another setup that you could see. I want you guys to just see what I'm looking for here, right? We're looking for that manipulation on the higher time frame. Then after you get that manipulation and a move down, most of the time your market's not going to go back up to there for quite a while. That's when you're going to start looking for a reason to enter in the trade. This whole area here is just a liquidity void. There's nothing here. So if the market does continue to go up, it's going to be going up to an order block, or for some people this would be resistance. Just depends on where you learned your education from, where you got your education. But it's all the same thing. Everyone has different ways of trading. You could have entered this on a break of, like, you could have been drawing here, let me get rid of this so I can show you some other things here. We'll get rid of that. You could be drawing a trend line, from here to here, whatever, looking for breaks below and then waiting for pullbacks to enter, or whatever you like. There's all kinds of different ways to do it. It doesn't even matter. Whoops. I hate when I do that. Delete. You can have another trend line. Say you missed this move and you are looking for a way to enter. Again, you can take from the low here to here maybe and wait for a break below and wait for a pullback to enter. Or you could place a sell order just below here. Whatever you want to do, there's lots of ways to enter into the market. So you got another opportunity here to enter in the market this way. A lot of people like to play these patterns. It's very common, especially in the stock market. But you know, it's all about what you want to do. Like I said, you don't have to use a strategy that I use. I just like my strategy because it gives me an opportunity to get in at a good price. That way I will be able to have a small risk to reward. Oh, I didn't even draw out. Let me draw this fib out. Let me show you what you would have made on this trade. Somewhere right there. So, of course, our entry would be here. We can put the entry, see if it'll let me put the entry where I want. Right there, okay. Get rid of this fib now. This would be where your stop loss is. This is your entry. So we have a very small 18 to 20 pip stop loss. We would say probably 20 pips just to round it up, but that's perfectly fine there. And of course, your exit would be at the 200% level, which was right here. So as you can see, you're getting almost 5 to 1 on your trade. Easy money. You're going to take 91 pips out of this trade. Like I said before, 91 pips on one trade for 1 week is amazing. Depending on how much you're risking, what the percentage is that you're risking, right there, you're done for the week. If you want to trade and try to catch consistent profit, you don't need to trade every day. You can day trade, but you can trade around Tuesday or Wednesday and just hunt these trades out. Look for a really good entry, and as long as you are going into profit and you do take 91 pips or whatever it is, your percentage goal for the week, then you can stop trading and wait for the next week. Or you can continue to trade, just lower your risk, lower your percentage or lot size. That way you can protect the profits you already made. That's something I haven't talked about yet. Just think about it like when you play poker. You just get on the table, you play, say you get lucky, you get pocket aces, and you do win a nice pot, and say you tripled your money. Why would you want to lose all that money that you just won? Lower the risk, lower the percentage that you want to risk on out of your stack of chips or whatever you want to call it, and put aside some to keep, and then just play the rest of that. Just lower it down, start to enjoy yourself, tighten up a little bit, get entertained and trade and make some money, and then next week you can start all over again. One thing I do like to do is if I take a loss, where I just go straight up and take a loss, so I enter here and it just goes right out and blows me out. I might have talked about this in another video, but I like to lower my lot size. If I'm trading, say, 2% on this trade, the next trade I will lower it to 1%. And then if I do well on that trade, I will go back to 2% the next time. If I'm not doing real well, I'll keep it at 1% if I'm breaking even or slightly profitable. But if I lose again, I lower it down to 0.5%. And then I trade that 0.5% as long as I can until I start at least make enough money to make up for the 1% loss. And then I'll raise it back up to 1%. And then once I make the money to make up for the 2% loss, I'm back up to full speed again. Like I always say, it's all about risk management. It's all about managing the drawdown. You want to have a nice, smooth equity curve. You don't want to have some crazy movement, like, for example here, just pretend like this is your equity curve here, this moving average. You want to get a nice move, maybe go sideways for a little, nice move up, sideways, nice move up. You don't want to see crazy dips. I don't even know if we have any crazy dips here. But anyways, you don't want to see your equity curve go up and then way down and then here and then down and then you get a big move, maybe come way down here. That might be okay for you, but if you are trying to get a job trading, or you're trying to find extra money from investors for you to trade, you really need to have a nice smooth equity curve showing increased profitability over time. And if you're able to show that for depending on where you're trying to get a job at, you will be able to get you'll have whatever they need, maybe a year, 2 years, 3 years worth of a nice growth, and then you will be able to trade for just about anybody. They will have no problems getting a job trading. So that's it for this video, just touching on this AUDUSD trade. Please like, subscribe, and comment below if you have any questions. On the bottom of the video right here, you're going to see my if you're not a subscriber, you're going to see my little logo. You just press that to subscribe, or you wait till the end of the video and you'll be able to subscribe right in here. But if you like everything you see, just check out all the other videos. I do talk about that I'm with Imarketslive, and if you want more information on that and how to get more information from me and get details on how I trade, you can join Imarketslive. And once you're in my group, you'll get one-on-one. You'll get all kinds of stuff, trade ideas, trades I'm looking at, yada, yada, yada. And if you're interested in at least finding out what that is, what I'm talking about when I say Imarketslive or IML, just go to my first video or go below in the description. I also have a link to that first video. And also in the description, you're going to see how to link up with me on Facebook, Twitter, and Instagram. And I do post a lot on Twitter. So if you want to get information that way while you're on the go, you can do that. I will post some trade ideas through there as well. So thank you guys for watching. Enjoy your day, and good luck and good trading.
I've been watching you.